I think that that's where we'll get to. I don't think it's going to happen overnight. I think it's going to take 2 years to get there. We just jumped from 299 to 3.5 overnight. That literally happened in the last 2 weeks. Unbelievable. Everybody's running scared.
We're in Houston right now, walking our new 56 unit crazy property here. It starts down there.
We got Allon, Avgi, $1 billion man.
Talk Shop Podcast. Today, I want to welcome Nick Ceccarini with Weatherstone mortgage broker, king of the game. The guy has solo done over $100 million in 2021, and that's without the rest of his team. Nick, please introduce yourself and tell us about yourself a little bit.
Good morning. How are you guys? This is exciting. Good day. I've been doing this. Weatherstone Mortgage is around for about 25 years. I've been doing it about 31 years. Love what I do. Love mortgages. It's a great experience, and doing it when you come to us, we do an incredible job and take care of everybody.
That's awesome. How do you get into mortgages, Nick?
Oh, it's a long story, but I went away to college to play hockey. I got cut the first day I got on the ice for being too small, and quit college, came home right then and there, and took my brother's job interview in the financial industry at a credit union. Started working at the credit union for about 2 years. They introduced me to the mortgage department, and the game was over right then and there. That was it. Fell in love with it. Have done nothing since then.
So you dropped out of college?
I dropped out of college completely. Went one semester. I own a college. Proof is in the people, and I proved, yes, it is. Let me go be my own person and do my own thing and love it.
That's awesome.
Wouldn't do anything else.
So you started working for a mortgage company, I'm assuming, and just went on your own after how many years?
So I worked at a credit union for about 2 years. A gentleman I knew came into the credit union one day and said, I'm a mortgage broker. I want to do the deals the credit union can't. And after about 6 months of that, I said, why is he doing them and I'm not?
Yeah.
And so I went to him and said, I want to come work for your mortgage company. Found out that he was just opening a brand new one. It was called Family Home Finance back then. There was 5 of us that started. I was there for about 5 years and then said, I'm going to go on my own.
But back then it was crazy.
It was different. It was the world was different then. A file was a file. You had 7,000 pages of paperwork to do every file. The income, the asset, and the credit was checked 12 times before you can get an approval.
Really?
And then it went from there, and then it progressed into the Wild Wild West, which was the fun part.
Yeah.
You know, in 05 and 06, it was completely,
it was wild?
Wild. You had a heartbeat. Banks would come into my office every single day, 4 or 5 different lenders saying, you got a 620 FICO, I could do your deal. Period. That's it. You didn't need another thing. You needed a 620 credit score, they'd lend you the money.
Wow.
We would do, we didn't do certain products that were out there at the time, but all the other mortgage guys were doing 125% on the purchase.
125?
125%. You could literally buy the house, finance the house, the closing cost, and not like today where, I want to do a rehab loan, I want money for repairs and stuff like that. They literally hand you 25% over the purchase price.
Oh my
God. Right
God.
then and there at the table. Didn't even have to disclose what you were doing with it. I'm not to pay off debt to qualify, not because I'm putting a second story on, I'm going to make the house worth more money. Here's 100% financing plus here's 25%. Have a good day.
Wow.
And then they would give it to you as interest only, negative AM.
No.
So the loan would literally go up instead of going down year after year.
But wait, did they still look at debt to income back then?
They looked at your income that you'd qualify it based on an interest-only payment. So you're paying interest. If you borrowed $100,000 and the interest rate was 8%, you were paying $8,000 a year divided by 12, and that's what your payment was. It was a joke. It was a joke.
And could you hedge the rentals against that as your income?
No, that was once you got into not a primary and you got into a secondary home or an investment property, they would give you 100%. They would, or 110. They wouldn't give you 125.
I wish I had that
was the difference.
Opportunity.
110 to buy. You know how many? Forget it. You own millions of houses and you'd own 5 million houses in 1 year.
Seriously,
if you could do that.
Yeah, I couldn't imagine.
And then what they would do is they would do a seller's concession on every house. So you'd have a $100,000 house, do a 10% seller's concession. So or 6% was the common. So your house would go for 100 plus $6,000. So they'd lend you 106, but that would be considered the purchase price.
Wow.
So now I financed my purchase price and my closing costs. Now the guy next door, when he went to go do an appraisal, got to use your comp as 106, not 100. Well, if you do that as bigger numbers, you watch how quick the prices.
But how did they record that at 100?
Gets recorded as 106 in the county clerk's office.
Oh my God.
Because it didn't say, oh, the seller's giving you $6,000 back towards your closing costs. It just said a purchase price.
And now those days ended in 08?
06 is when the bottom really fell out. 07 was a disaster.
07 was a disaster.
07 was a complete disaster. I went in 05. I had 98 guys. I had an office that was a party. It was literally insane. We had a blast, and it dropped overnight. Literally, bang, done, over.
What
Banks
caused that? Not the whole economy, but that one drop.
That drop happened was warehouse lines. So I'm a broker. I then send my money to a bank. The bank funds the loan. Most of the time, at the time, was mostly big mortgage bankers, not an actual bank. It wasn't like Chase is taking their depositors and lend you the money. It was a banker who had a line of credit. So those line of credits get reviewed every once in a while. Once Wall Street saw, oh, maybe I might not buy mortgage-backed securities because they were in trouble, well, every one of those bankers' lines got closed. Once their lines got closed, they couldn't buy my loans. Overnight. Done.
Wow.
And it didn't happen like this guy, then that guy. It went immediately. And it was over. And at the same time as that, everybody got blamed. Every mortgage company got blamed for you guys were doing this, you guys were doing that. So that stopped. And then all of a sudden, the New York Department of Financial Services came in and said, all right, we're going to change the standard. You all got to get licensed. See, back in 05 and 06, I was the only one licensed.
Nobody had to be licensed.
The pizza guy could literally come in, and we had this, so this is a true story. The pizza guy that used to come in and deliver pizzas to us once a week when we would have Friday pizza said, my aunt needs a mortgage. And we said, okay, you want to make some money on it? And all of a sudden, he was literally the pizza delivery guy, and he would hand out business cards to the places he was delivering pizzas. If anybody needs a mortgage.
Talk about marketing.
And he was an originator for us because the only one that mattered was I was licensed. And after that, when 06 came and 07, then they changed it to NMLS, and now every single person had to be individually licensed besides the company. You got to go take a class. You got to go take a test. Like the Series 7 type thing. And once that happened, changed the world. And it also, fees came involved. I used to pay a one licensing fee originally for like $1,400 a year. In like 2000, it became volume-wise. So my fee went from $1,400 to $50,000 overnight.
What was this fee for?
The fees for the banking department. The banking department charged $1,400 for every mortgage company. Now they all of a sudden switched it to volume, and my fee went from $14,000 to $50,000. Then it went to individuals had to pay a license fee. So that pizza guy now would have to pay a license fee. If he's only doing one loan a month, maybe it's not worth it to do this for him.
Yep. And
all of a sudden that all changed. Besides, they had to go take a test. Besides, they had to take a class. It got crazy and the bottom fell out. And it was a different world then.
That's crazy.
And then all the problems happened. And now these mortgage bankers that want to have a warehouse line, now their portfolio is reviewed.
What's a warehouse line?
A warehouse line is their line of credit. So basically, a banker has a line of credit that he lends off of. So a borrower comes to me and wants to borrow a loan, wants to borrow $100,000. That $100,000, I go to a banker to lend me the money to give them, because it never goes in Weatherstone's name; it only goes in their name. When that banker lends them the money, they don't literally lend them cash of their own; they lend them off of their line. Then, when they sell that loan to Wall Street, that money goes back and pays that line back. And that's how they continue to fund loans.
Okay.
Now that warehouse line is reviewed. That warehouse line has strict guidelines of what they're allowed to lend off of it. It used to be, you know what? You want to buy that commercial building? No problem. Oh, you want to do a 125 loan? No problem. They weren't really reviewed as much on what that warehouse line was.
Holy
That's
shit,
what
that's
all
crazy.
Changed everything. And now it's every file has to income. Every file has to have assets. Every file has to have credit. And that's why we're in a different world today than then. I don't think we have any bubble coming. I really think the only thing that'll slow it down is the rates will creep up a little and it'll slow down that way. But otherwise, I don't think we have anything to worry about with the values.
Really?
I think you're solid as anything right now.
That's a hot topic that everyone talks about.
Everybody wants to talk about it. But I got 31 years of experience doing this. I've seen it. I've seen why. Nobody comes in and buys 100% finance and loan anymore. So those houses aren't leveraged to the absolute max anymore.
Yeah.
There's equity in those properties. You buy a property today and then you do some renovations to it. It's worth a lot more right off the bat. You get to do a refi and take the cash out, but they don't lend you all the cash.
Not at
they
all.
They only lend you 80% of it.
Yeah, I'm leaving equity in these deals.
You're leaving
too.
equities in. So even if the values creep down again, those loans are still solid because they're against those houses. So I don't think you're going to see a foreclosure.
But what about all the people
mess.
defaulting because of the COVID crisis and
That's
they're
a little
losing
bit
their
of a different
jobs?
story, and I think you're going to see the government come in and help them. I think you're going to see more COVID protection stuff come on, especially right now. I don't think they'll just let it all fall apart. And if it does, it's okay, because there are so many investors on the sideline waiting to buy them.
Really?
No doubt. There's people ready to buy those houses and say, I get a call probably 3 times a week saying, do you have a foreclosure list? Do you have any hookups with banks with their REO properties? Do you have a way that I could get in before they get on the market? Go look, every house that's on the market, 15 people, 30 people, 50 people sitting outside,
Yeah.
open houses. On the way here, I passed 2 open houses of my realtors and saw 50 people at both, sitting in the freezing cold with their kids wanting to see the house. It's cold out
cold
right
right now.
and they're just trying to get in. 50 people at a house. It's crazy.
Nick, bring this closer to you.
Sure.
I do not want you to lose your audio, dude.
No
You're
problem.
The king storyteller.
I got a lot of
know.
stories.
Seriously.
I could tell you a lot of stories about
And-
mortgages. I've seen it all.
And Damien, you know what? I'm turning off the clock because we could talk for a long time, me and him. This guy's fucking awesome, man. And I haven't done that yet. So I
Thank
want
you.
you to make sure that our editors cut up his content too so he can use his stories. It doesn't have to be all about me. Like, his stories are prime time.
I got some really. I'm
that
serious. I got
that
some good
pizza
stories.
delivery story,
Yeah.
I want to post that.
You can.
That's
definitely.
content.
No doubt.
Yeah.
I can tell you some good ones.
So the bottom falls out.
Bottom
Right.
falls
It's
out.
07.
We got to regroup. We
You
got
got 98 people. You slim down.
Literally, I'm not kidding. 5 mortgage, and they weren't all loan officers. I had a 0 to 0 type strategy in my office. Everybody got paid the exact same amount. Didn't matter if you were with me from the beginning till you got hired a week ago. Everybody got based on the volume bring in, and it was on a monthly basis. So if you brought in $10,000 worth of business, you got 50%. If you brought in $20,000, you got 60%. If you brought in $30,000, you got 90%. And we just had a scale, and that's how everybody worked. Overnight, when the bottom fell out, I'd lose 5 a day. 5 guys would come in and say, listen, boss, I can't do this anymore. I got to feed my family. I got to do whatever. I'm not doing this anymore.
But why? Because you're not
Because
selling
they couldn't.
loans?
There was no mortgages anymore there.
Nobody.
I had
but
my
people are
banks
still getting
went
mortgages,
from,
no?
I had 5 banks coming in every day to none, to calling the banks, and they were out of business. Overnight, out of business. Citibank sent me a fax, like a literally rolled up on the heat paper saying, as of 24 hours ago, we no longer lend money. Just like that, from Citibank.
Wow.
It was crazy. It was like, oh shit, what am I going to do here? What am I going to do now? Like, this is nuts.
So how many guys did you drop down to?
5.
And you?
I was 1 and there was 4 others.
So there's a 5-man
5-man
team
show. That was all we had
now. And
left.
what were you doing?
Trying to recover, try to regroup, taking my savings from home to keep the doors open.
Private loans?
Did a couple private loans. We still had a couple channels. There were a couple people, but you had to have 20% down. You had to have 700 credit scores. You had to have a good job because they were still lending mortgages, but mostly portfolio lenders.
Okay.
Nobody that was doing
Like
lending
bundles
house.
of homes?
Like Greenpoint Savings Bank was a big one back then. They were what's called an equity lender. They didn't really care about selling it to Wall Street because they portfolioed everything, but they still had a lot of money, so they would lend based on the property.
So they would throw it on their balance sheet
They
because it was
would
safe.
throw it on their balance sheet and keep it there. They'd lend you 55% of the value of the property. Period.
And at that time,
10.9.
they were 10.9%.
10.9.
So they were killing it.
Killing
at the
it.
time.
You want to talk about rates? I love my favorite story in the world. I was 19 years old doing my first mortgage ever. I worked for the town of Hempstead Credit Union. I lived home in my parents' house. I go to work one day. We're sitting in a boardroom type sitting. It's a purchase. I was all excited. First mortgage I ever wrote is closing. Older woman. She stood up and she kissed me on the lips.
No.
Because she said, thank you. Oh my God. I went home to my mom and said, I just did a mortgage, and the lady kissed me on the lips. I couldn't believe it. I was in shock. 13.5 was the interest rate. And she kissed me on the lips. So last week when I told somebody the rate is not 2.99, it's 3.5, and they bitched, I was like, really? Really? You going to complain
Wow.
about that?
Listen, I'm one of those guys.
Yeah, right?
If it's over 4%,
Is that
I'm
your
not
out?
having it.
All right, well, you're going to
Listen,
see. I think that's going to change soon.
I've been taking at 5% non-QM loans that are a little, like hairy.
Yeah.
And I'm willing to accept that, but at the end of the day, I'm Jewish. So,
Yeah, I got it.
it runs in the
It
bloodline.
runs in the bloodline, right? Yeah. You're going to see that's going to change.
Where do you see rates going up to?
4.99 is going to be a regular 30-year fixed when someone walks in the door.
Okay.
I think that's where we'll get to. I don't think it's going to happen overnight. I think it's going to take 2 years to get there. We just jumped from 2.99 to 3.5 overnight. That literally happened in the last 2 weeks. Unbelievable. Everybody's running scared. 3.5 is an incredible rate.
Yeah.
People need to slow
it's
down.
great.
We shouldn't be at 2.99. Yeah. No one can make money at 2.99 for 30 years. The bank has to pay me to do your loan. The bank has to pay their employees to service that loan. The bank has to make some kind of money, has to cover some kind of
You
defaults.
see, I'm comfortable with that. Like, you
Right.
do not scare me at all saying 5% rates.
5% is a
because
fair rate.
I have a great spread.
Right.
So if my rates creep up to 6 over the next couple of years,
You're okay.
I'm okay.
And that's what you want.
Yeah.
You want to be able to survive that, and you want to be comfortable.
You want to thrive, you know?
Of course.
If that's what happens, then a lot of people are going to fall out. Cheaper capital's gone. And then only the strong and the people with upside are going to thrive.
Correct. And your margin, if you need 2.99 or 3.5 to survive, you shouldn't do this.
Yeah.
That means that you have no skin in the game, and every bit of this is based on that rate.
And slim margins.
So the margin and your debt servicing can barely cover that.
Yeah.
Which is not something you want to do.
No, and I'm not in that world at all. I love cash flow, so that I'm happy to hear that.
Yeah, I think that's where we're gonna go. So back to my 2008. Everybody leaves. Photocopiers almost put me out of business. That's literally that almost, because every mortgage company was going out.
Okay.
Our tagline is financial shelter through any storm. That's what Weatherstone's tagline is. We've had it when I took the company over from the prior owner. That was his tagline. I loved it.
You bought the company?
I bought the company.
Okay.
I could tell you that story quick in a little while, but so we had that. So I told my wife, I gotta stay open. That's all I care about is I want to stay open. I said that the financial shelter through any storm, I got to make it through. Photocopiers. We had, 12,000 square feet was my office at the biggest.
That's huge.
And there was offices everywhere. There was people everywhere. There was furniture everywhere. I paid $30,000 for cubicles that I paid $2 for someone to come and take them away 5 years later because I just had to get them out of the space because the landlord was taking the space over, letting me out of my lease. Just crazy things. Photocopies, I personally guaranteed them all. I had a room in my office with probably about 15 photocopiers that I was paying anywhere from $199 to $600 a month just sitting in a room, doing nothing. Can't sell them. They're worth nothing. They're leased, and I personally guaranteed them. Had to pay them every month.
Wow.
I'd close a loan and say, I could pay the photocopy bill.
Holy
It was
shit.
crazy. But
So that's what almost put you out of business.
that almost put me out of business. The second thing was when I got so big, I played golf a lot. I wasn't taking care of my own clients. I had guys in the office or girls in the office, and I would get a loan and be like, Johnny, call so-and-so. They need a mortgage. And then I'd get the next one and be like, on my phone, okay, Susie, this person needs a mortgage. Take care of them. And Nick wasn't involved in the transaction, really. I got the referral because I had some relationships, and then people in my office were handling them. I changed that completely. In 2008, no one touches my files.
Since
Since 2008. I have assistants that I'll talk to you. How you doing? On the way here? What's your income? What's your asset? What's your credit? What are we doing? What are you looking to do? Okay. Chris in my office is going to call you and take your date of birth, your social security number, how long you've been at your job, and stuff like that. But everything else, you'll hear from me. You're never going to get a rate quote from somebody else. You're my client. You're going to hear from me.
And that's why you did $108 million.
$108 million
in 2021.
Yep.
And how many deals was that?
I did, 198, I think, or 189, something like that, closings.
And the office overall did how many? Because now
Just
you're up
over
to
300.
Okay.
Right now, we have a different thing. So my brother works in the office as well. Very, very successful mortgage broker. He used to, when we were big, he didn't really write too many mortgages, and he was the office manager, ran everything on a daily basis, took care of all the money, took care of everything. Then as the trouble in 2008 came, he started writing mortgages and grew, and he probably did $70 million, $60 million this year.
Wow.
He's legit, real deal on my coattails every day, pushing me. And he's my older brother, and he wants to be the big fish, and he probably will one day, the way he's going. But we have the two of us, and then we have two other guys that write mortgages. One guy was with me for 20-something years.
Wow.
Left for 2 to go to Bank of America because he saw
On the
bankers
corporate side?
originating mortgages, but working directly in a branch. How you
Okay.
doing? I want to write a mortgage. And he saw after 2 years that's not the way to do it. And he came back. And he writes mortgages, and then I have a young kid that we're teaching. That's the only 4 originators that we have. Everything else is support staff because we all now believe in where we do this. I believe that there's no better mortgage broker out there than me in the world.
Yeah.
I believe that. I'm confident about that. I'll say that any day. I can tell you my
That's why you're on this
thousands
podcast.
and thousands of clients that will tell you they wouldn't go anywhere else but Nick. I don't ever have clients that come to me and then go somewhere else the next time.
So you keep the doors open. You're doing these loans on equity, right?
Yep.
It's
Everything
like
is done.
55%, whatever, and then things start to creep back to normal, or what
Not
changes?
really. Slowly. A couple banks. There was a Michigan-based bank, and I used a Michigan-based bank for a reason. The biggest thing, the majority of my business is New York. I am licensed in New York and Florida, but New York. And New York's biggest thing is certificate of occupancy. Everybody wants a CO, permits, all that. Michigan doesn't care about them in any way. So they carry that over to their lending across the country. So that's one of the biggest niche things I have is that I never require a CO search on any property. So that definitely sets me apart from everybody. But a Michigan-based bank came out and started in with a regular, conventional 20% down, 5% down, 10% down deal. And I truly became their poster boy.
Really?
And I became there. They plastered me everywhere. Go to Weatherstone, go to Nick, go to Weatherstone. And I kind of grew it from there and grew it from there. My brother jumped in and the two of us just grew it from there. And that really became our biggest thing is that bank InterFirst.
So that's your main bank.
That bank then got bought by Citibank, and Citibank destroyed that bank. And then I went on to another couple different, we went through Quicken. We did that. We did the Quicken thing. That doesn't work. Anybody that thinks they can get a mortgage on the biggest transaction of their life over a phone app it just doesn't work. And then a United Wholesale Mortgage got created by a guy named Matt, and it's the best in the world. It's number 1 in the world for a reason.
You seem to have a lot of long-standing beef with Citibank.
Citibank only because they dropped the ball. Honestly,
The facts, the bank buyout.
I have their office used to be right next to mine in Plainview.
Yeah.
And I could tell my client, walk into Citibank, go apply for a mortgage. I would send my loan to Citibank and get them a better rate, which is awful customer service. How could you go to the mortgage broker down the block and get a better rate than walking directly into the bank?
Yeah. But that's the value in brokers.
No doubt.
Some brokers
I would
like
do it
yourself.
in 3 weeks. They would do it in 6 months. It was crazy. And I had a pipeline with them. And they were one of the only banks that I did business with ever in 31 years that didn't honor the pipeline.
Really?
Didn't matter if my application was 2 days from closing or 2 days started. They said, we don't lend anymore today. Sorry. And I have a problem with that. Because you don't care about the client.
And you're a deal maker. So you can't take something away from a deal maker that'll stop the deal.
You gave it to me in writing. You committed to lend. And that was it. They just stopped. And I believe that every transaction is not just about the money. It's about the person. There's a buyer who's selling his house, moving on to something else. There's a buyer that's moving into their new home with their family. A seller that's taking that money to buy something else, to retire, to do something. Maybe they're buying another house and they need that cash. And when you pull that commitment back, or you don't honor what you're doing, they'll call me and be like, oh, you'll take it to another lender. But what about that person that had a moving truck set for Friday?
Yeah.
Like, that's awful. I don't like to deliver that, so I don't deliver that news. I've never had it happen again. I have a backup plan for every loan I do so that if this didn't honor it, I could do something else. And now with United Wholesale, I don't really worry about it. I've been out there, their operation. They're number 1 in the world for a reason.
Really?
Number 1 in the world for wholesale lending.
Wow.
And I've been out there. I'm going out there this week again to Michigan. I go
where?
out there a lot. They're in Pontiac, Michigan.
How far is that from Detroit?
I stay in Detroit, and it's
Do you?
about all the time.
Yeah.
It's about
I was
41
just there.
minutes. Yeah?
Yeah.
Where'd you stay?
Airbnb.
I stay at Greektown Casino Hotel there.
It's cool.
It's awesome.
And next time I'll
Unbelievable.
do that.
Definitely.
I wanted to get to know the environment.
Okay.
And be in the communities that I want to buy houses.
Okay.
But I've slowed down on Detroit and I've moved faster in Houston.
Okay.
You know,
That's your new area.
Yeah, right now I'm acquiring in Houston, and St. Louis I'm doubling down on.
Okay. Have you done anything in Detroit or?
I backed out of a
Okay.
deal because the partnership just didn't work.
All right.
You know, I was partnering up with a lawyer and another person, and the lawyer was too stingent on his terms, and I'm like, man, I want to have fun.
Okay.
You know what I
I know.
mean?
Dan Gilbert did an amazing.
Oh my God.
An amazing job with Detroit.
Yeah.
He took a city that was done and rebuilt that city.
He's incredible.
On his own. He built it on his own. He owns Quicken, but it's unbelievable what he did.
You must get crazy perks then if you go to Detroit with the games and all that stuff.
Anything
Really?
I want. Anything I want.
Really?
Yes.
Next time I'm going with you to Detroit.
So I'm flying in Wednesday because I'm getting an award for being the number 1% of the mortgage brokers in the United States with them. So they're flying me in Wednesday. I have a couple meetings, a meeting with the owner of United, and then I'm going to Top Golf with the top 25 mortgage brokers in the country.
That's awesome.
That's going to be fun. And then I have a bunch of meetings on Thursday, and then I'll stay in Michigan for a couple of days. My son lives out there, so I'll get to go see
really?
him. Yeah, but I
What's
spend
he
a lot
doing
of
out
time
there?
playing hockey.
Okay.
He's a hockey player out
Cool.
there, so it's pretty good.
So now you rebuild, you link up with these banks, and that brings you to today.
Kind of, yeah. I mean, I think that it took till probably 2018, where I changed everything again. From 08 to 17, we built just my regular, here's a box of donuts. I'm going to walk into a real estate office, rebuild all the relationships I had from back then. Really just doing a good job for my prior clients and stuff like that. In 17, my assistant and I decided we're going to rebrand Nick. And I started doing social media, and I started doing posts and Facebook and Instagram and stuff like that. And it's changed so much.
Yeah.
I walk into meetings now doing this 31 years, and I see people. I just went to an event recently. I saw 5 guys that were like, "What's up, Nick?" And I knew every one of their names. I've never met them in my life. They were hugging me with bro hugs, like, "What's up? How are you? Oh, I saw you did that deal last week. I saw you." That.
Yeah.
It just changed the environment.
Yeah.
And I see the people that are doing that are rising them above everybody else.
Yeah.
It's a unique group of people, and I see them everywhere I go. Every event I
Content.
go to, we went to dinner the other night, you walk in, and there were 12 people there that are all in that type of group that are above everybody. And I really see it, and I think it's all social media. I think it's a lot of different avenues, and you gotta be flexible. I'm old. I'm not young like you guys.
You're young.
Listen.
Stop.
I'm old in my ways of doing things, and it took me a long time to change.
But you adapt.
Yeah, that's what I'm doing. I'm adapting because I still believe I'm the best.
Yeah.
So now I got to do today's ways as well as the old ways, and you combine them together, take care of everybody, and sky's the limit right now.
The proof of it is in the pudding,
It is.
my friend.
It really is. That's an old quote, but yes, you're not old enough to know that. But yeah, it is.
Man, that's awesome. So now I want to talk about the mortgage world a little bit because
Sure.
I don't necessarily understand all the numbers. I've been briefed on it a couple of times, but you'll help me understand it much better. So like a typical mortgage, a
Okay.
conventional mortgage, when you sell a mortgage, when you have a client that gets a mortgage, how does it work? Where does the broker make money?
Okay.
Where can the client save hypothetically? And why should they go to a broker rather than direct to a bank?
Okay. Couple things.
Or
Okay,
vice versa.
So the broker is a wholesale lender, and the borrower walking directly into a place is retail. So there's a difference in the pricing. So if a borrower, like I was saying before, could go into Citibank and I can go in, it's a street rate versus a wholesale rate. So for you to go into a bank, I'm going to use Citibank because we love that one.
Yeah,
go into
Citibank's the move.
Citibank right now.
At
and get them
Citibank.
At Citibank, right? We're gonna get them to finance your next podcast.
Yeah.
But if you walked into Citibank or Chase right now, you would get a conventional loan at 3.625. That's their rate. If I took a loan and I sent it to Chase or Citibank in their wholesale channel, they would pay a broker 2.5% to give the borrower that rate.
Same rate.
Same rate, they would pay me 2.5%. So what I did
On the back.
On the back.
And you could charge
I
points on the
can't
front.
charge anything on the front.
Why?
You can only charge, since 2009, you can only charge one or the other when you're a broker. You either charge on the front or you charge on the back. You
can't do
cannot do both.
No
only
way.
Only a banker can.
I don't believe that.
I swear on my life.
So what's the difference between a banker and a broker?
A big difference.
How do you
okay?
become a banker?
I get a warehouse line. I take responsibility. I underwrite myself, and I now can become a banker.
Okay.
I have the responsibility.
But you're still
post-closing,
wholesaling deals.
You're wholesaling it off your line of credit. You're not wholesaling that loan as an individual loan. You usually bulk portfolio or package it and sell it to someone else.
So bankers can make more money than brokers.
No doubt. No doubt. And
Really?
they do. And they charge more. And the client usually does not get as good a deal.
Is Cardinal Financial a banker or
Banker.
broker? Motherfucker.
Based down in Southfield, North
I
Carolina.
knew they got me. I knew
Listen,
they got me.
There's a couple
They
good
charged
guys.
me on the front and on the back.
Yes.
I knew it because the rate was too high.
There's a couple good guys at Cardinal. I love a couple of them. I get along with them.
So it's not that I necessarily dislike the bank. I have nothing against the bank.
Right, yeah.
It's some of the people there, like I knew they were lying to me, but I was a little bit earlier on in my career. This isn't now.
I got you. Now you got it down pat. No one gets
Yeah.
anything by you.
Not anymore.
Right? That Jewish part is coming back
Exactly.
out. I got it.
But back then, I'm like, I have a bad feeling, and I was already locked in, and I know they got me. They overcharged me, and I'm pretty upset about it.
Okay, so
now.
a couple different things between a broker and a banker, and some of the reasons why I never even looked into. I've had a couple different bankers come in and want to change my name, take Weatherstone off the wall, put their banker name on the wall, pay me a big amount of money up front, and then just continue doing your things, except for all my loans go through the bank.
So like you're a branch.
I'd be a branch, exactly. So here's a couple things. One, broker has to disclose to the borrower 100%, 4 different times, how much I'm getting paid to make this transaction.
Okay.
Period. Banker tells you nothing. You have no idea what that guy's making on the front, the back, the side. If he made a deal with his grandmother and she's going to pay him, you don't know any of that.
Yeah.
You go to a broker, you have to be disclosed on a loan estimate, on an agency fee agreement, on a closing disclosure, and on your final closing disclosure. All 4 times, it's telling you to the penny, Weatherstone Mortgage is being paid this. Number 2, when the New York State Department of Financial Services came out with all their rules, and every individual had to be licensed, Weatherstone Mortgage also had to be licensed. So that's another license I hold.
So 4 people hold a license in your
Right. Each person in my office holds their own license, and then I hold an additional one for the company.
Got it.
The company, every January, has to go to the Department of Financial Services and say, how much am I going to make on every loan? Period.
Which is on the front or the back. You can't have both.
But it has to be the same on every loan.
Why?
Because no discrimination. So I say...
Yeah, but if I go there and negotiate with you.
Nope. Can't
No
work.
way.
Can't work.
So you charge 2.5.
I charge 2. See, because
2.
I'm smart. I realize that the street rate versus the wholesale rate is 2.5. So if I give you 2.5 and I take that 2.5 rate, yes, I make more money on the deal, but what's going to make you go to me? What is the first person someone says is, why should I go to you? And it's great. I can be like everybody else and say, I'm always going to answer the phone. I have great service. I have a great smile. I have a great personality.
Yeah.
I know what I'm doing. I've been around for 31 years. I could give you all that, and all that has value.
Got great stories.
But if I tell you I can give you a better rate than everybody else, my fees are less than everybody else, now all of a sudden you go, wait a second. Let me at least compare. On the way here, I compared to someone who was going to a banker, through a real estate agent, and last night he texted me at 11 o'clock at night and saying, listen, this is what they gave me. Can you beat it? First of all, that was like a layup because you gave me what you were getting.
Yeah.
So but I normally write, don't send it to me yet. Let me show you what I could do. But I know that they're getting 2.5% minimum. So if I give them my rate at 2, I'm going to be lower.
But now if you shop out that loan with other lenders, you could get better rates, no?
I could get a better rate because I'm only making 2.
Like
I'm not making 2.5.
Yeah, your price is fixed.
Fixed, set,
But
done.
now assuming you go to
UWM,
yeah.
sometimes their rate is better. So that's what I do. That's where a mortgage broker is different. Like I have 12 different lenders. I use 4 of them. I don't use the other 8. Honestly, I use 4 different lenders because United Wholesale Mortgage has the best rates. But they only do certain loans. They don't do everything. So now if I have a non-QM, they don't do them. So I got to take that non-QM to one of my other lenders.
Non-QM, you could charge whatever you
I
want.
can only make 2.
Bullshit.
I swear.
There's
I'm
no
telling-
way.
I will
'Cause
bring you into
9QM's
my
a
office.
private world.
I'm telling you, I'll bring you in my office and show you all my books. You still get a closing disclosure. You still get, because I'm still regulated by the New York State Department of Financial Services.
And non-QM, by the way, is a no-doc loan or like non-income based loan. You could get it on an asset like a rental property or even first-time home
it's
buyers.
a non-qualified mortgage, so it doesn't fit Fannie Mae, Freddie Mac, or FHA guidelines.
Yeah.
That's what that is.
But why can't you charge? It's a private loan.
Private.
So
Can't.
really,
And you can't do it on a primary residence in New York. because New York is one of the most strict states to lend. So if you were in Florida, I could do a non-QM loan on a primary residence, no problem. Give me your bank statements. That's how we're going to qualify your income. I don't care what you're showing your tax returns. In New York, if it was your primary, I can't do that. No such thing as a non-QM on a primary, only on an investment property.
This makes me love these conversations so much.
Because you learn.
I'm learning
Of
so
course you learn.
much.
That's what I'm here for. That's
You
what I
know?
want to do is teach people.
That's huge. So that's your advantage. You
Of
charge
course.
2 across the board on the back. You're
On
not
the
even
back.
charging on the front.
And well, if a borrower wants to pay points, with me, there's never an origination fee. It's truly points. Because I'm making 2 no matter what. So if you come in and I tell you my rate is 3.5, and you say, Nick, I really wanted 299. The borrower closing Friday wanted 299. He's paying 1.5% to the bank, not to me. He's paying points. An advantage. That's tax deductible because it's points. You're actually paying a fee to lower your interest rate. So the borrower gets the advantage going to me versus a banker as
And the
paying
bank is still
points.
paying you.
The bank is paying me 2 no matter what.
So you're
But
not charging on the
at
front.
3.5, the bank was paying me 2 and the borrower was paying nothing. At 299, the bank was only paying me a half. So the borrower is going to give the bank 1.5 to get that lower rate, and the bank is going to pay me 2 to make up the difference.
I see.
I'm always getting paid on the back, but the borrower is, but they get it as it's not an origination fee. It's points. They're truly getting an interest rate for paying the bank a low fee, so they get to write that whole thing
But
off.
now the bank doesn't make, I mean,
The bank
where's
makes more money.
Spread?
Oh my God, it's all on selling it to secondary. That's where they make all
But
their
what's
money.
the spread on the secondary
Could
sale?
be 4, could be 5, could be
How?
all depends
How
on
does
what
that
they.
rate justify it?
It's all hedged in the market.
But there's no prepayment penalty. So
On
what
any
if somebody
loans.
just cashes out in a year?
I have a 6-month prepay. So if a borrower comes in and says it's called a mug you clause, if I make
What's it
2%, a mug you clause, like they're gonna mug you. So the, UWM,
clause?
every one of them has it. So if I originate a loan, close it, they pay me 2%. If that borrower pays that loan off in the first 6 months, I got to pay the 2% back. It happens on
So
some
you have a
of the
2% prepayment
penalty.
because you're not paying
Not
those.
to the borrower, only I have it.
So
The borrower doesn't pay that. I had one last week where the borrower kept the house for 5 months. The homeowner died, so the kids sold the house. I asked for a favor. Could you please wait 6 months? They said, sorry, we can't. We got to sell it.
So you
They
had to
sold
pay them
it,
back.
and I had to pay the money, the 2% back to
Wow.
United Wholesale.
Oh, what is Mugya?
That's mug you. They mugged you. They took your
Is
money
that
back.
just like the
they
street
just stole
term,
it back.
or is
That's
that
a street
shit?
term.
Okay.
Yes.
I was
The
about to
actual
say.
word is a recapture clause, but we call it a mug you clause because they
that.
mugged me and took my money right out of my wallet.
That's so funny.
But yeah, so that's kind of the difference. But the bankers got some advantage. Servicing. I have nothing to do with the servicing. That's where a bank makes all their money. The servicing is what every bank wants to do. They're not going to lend you 2.99 for 30 years. A 15-year loan at 2.25. They're not making any money. But that's servicing of your taxes and insurance that they get to hold in an account. It's paying nothing. There's no interest. They had do that by millions of loans, and they got billions of dollars basically for free that they get to invest until your taxes are due or until your insurance is due. And that's where they make the money. That's worth. When they sell the servicing, they can make 3 or 4% just selling the servicing.
Really?
Besides selling the loan. So a banker takes the loan in, charges 2 or 3% because they get to do more than me at the closing. So they made that money. Now they take that loan and they sell it to secondary and they make 4%. So they only paid out 2, so they made 2 more percent. Then they sell the servicing for 3%, and now they made 7 or 8 points on that loan.
Wait, so let's break this down. So
Go ahead.
Let's say $1 million loan.
$1 million loan.
So $1 million loan, a banker sells it. They could take 2 on the front, 3 in the back.
They could and make 5%.
So they're making $50,000 closing the $1 million.
So $1 million loan.
Now the bank,
For me, the most I can make on any loan because I have a cap.
$1 million loan, $20,000.
20 grand is the most I can make.
Got it.
That's the most I can make on any loan. So if I did a $2 million loan, I could still only make 20
Now the
grand.
bank treats it the same.
The banker, yes. But
No, the bank. The banker.
the bank sells that loan
And the bank's spread is on the servicing and
on that. So they could make 5% where I only make 2.
The bank.
The bank. So if you're United Wholesale, you originated that loan, you funded the loan, you paid Nick 2%. So United Wholesale's out 20 grand. Now United Wholesale sells that loan to secondary for 4%. So they made 40 on the 20, and then they sell the servicing on $1 million loan for another 2. Now they made 60 and it only cost them 20.
Because they locked in the servicing.
They locked in the servicing.
Got it.
Right.
And now what decides the 4% spread that they're selling?
What the
you off
market's going for that day. Every servicing company bids just like a stock market, and
But now the banks, are they regulated on? Well, I'm assuming
Obviously
they are.
they all are.
Yeah, of course
They
they're
all
regulated.
are.
But how highly regulated are they, and how high they can charge the rate?
It's crazy. You ever hear of a reverse mortgage?
Yeah.
What do you think they make right now?
A fortune.
I've never done 31 years. I will not do one.
I heard brokers make like 8 points on a reverse.
Nine.
That's crazy.
I live near a person that ran a reverse section, and when I see them, they're like, "Why don't you do them?"
Really?
And I'm like, "Because I love my clients, and I'm not taking 9%,
wrong.
8%, but it's regulated to be okay."
Yeah.
They justify it. I don't see it, but they justify it.
So, wow.
Reverse mortgages are probably it's a tool.
But it's a hard sell.
It depends. If you're it's really life expectancy when it comes to a reverse mortgage. And if the person is truly older, can't afford it, and their kids don't care about the inheritance, and there's no other way to do it, the person deserves to live in their house to the end of their life. So
and now this this broker makes 9 points on the reverse.
And
but
the
now
guy,
what
and the
does
lady
the bank
dies.
make?
It's ridiculous. Because
Really?
and then the person dies in a short period of time. So the family's okay. They're happy. Dad got to stay in the house till the end. And now when they go to get my payoff letter, and my mom borrowed $100,000, and now she owes $220 2 years later. And now you hear all the newspapers about how they stole the equity of my mother's house, and that's why I don't do them for that reason. Not a good scene.
Yeah.
I don't like them. There is a time and a place for it. I just don't do it. I stay away from it.
Well, you've always been a straight shooter.
Right.
Hence
I
why
stay
you
away
weathered
from
that
it.
storm.
There you go. You're getting it. I like that.
Yeah.
See, you pick up. You're like me. You listen to things and you pick up on them.
Yeah, thanks,
I like
man.
that.
Yeah,
I like that.
you got this down clearly.
It's something it's my passion. It really is.
And you host dinners and you bring people together.
See, but I do that. Listen, anytime you do something like that, there's a benefit for everybody. But I like that because, listen, if I didn't invite you to that dinner, one, you wouldn't have got to spend personal time outside of business life with Asaph.
Yeah.
For you, it was great. You got to sit down with him, hear a little bit about his vacation, hear that. You met 5 real estate agents. Maybe one of them or 5 of them give you a house that you could buy in the next, so you have 5 more avenues to do that. For me, I meet a couple of people that I can do business. I'm sitting here and I'm going to get 3 deals off of sitting here because 3 people online are going to see this and say, hey, I want to call you. No question. I know that.
No question.
And
if not
what
more.
I do, I buy dinner.
Yeah.
And they all sit there like, wow, that was great. Nick bought that. No, it's good for everybody.
Yeah.
And that's the way I do everything.
And you're building friendships.
Definitely. And I believe in either do it right or don't do it at all.
Yeah.
Always.
When we sat there and we were talking, I'm like, this guy has the coolest stories ever. Like, I need him on the podcast.
My work stories are a little different. My office was nuts.
That pizza boy story, that's going up. That's awesome.
I have some good stories. Been through a lot with this, and I love it. I love what I do.
Yeah. So, Nick, what can we do together?
A lot of stuff. We can. All right. So, do you retain all your properties, or do you ever sell them?
I retain almost everything.
All your properties. So you don't sell anything. So
here and there.
Here and there. Person that's going to buy that house. Hey, where are you getting your mortgage from? We deal with this guy. This is the person you should be using to buy one of our properties. Number 1. Number 2, when you're buying a property and you have a problem, call me. Let me see if I can help you. I have a certain wheelhouse. The commercial part's not my wheelhouse. I'm not going to sit here ever and tell you I can do something I don't. Anything over a 4 family is not my thing.
Yep.
It becomes a commercial loan instead of a residential. I have some commercial contacts. You're way ahead of where I would be. I'd be sending you there. They would listen to me because of my years' experience, but it's not what I'm good at. And I believe in either do it right or don't do it, and I'd rather you not.
Yeah.
And then we're going to introduce each other to stuff. That's probably where more. If it's not direct me and you doing something together, you're going to introduce me to people that these houses that you're buying from. They might be buying something else.
Yeah. And
I'll go do their mortgage, and I'm gonna introduce you to.
Do you do a lot of VA loans?
Oh yeah, I'm the best in the country. You want a VA loan, you will not get a better VA lender.
Okay, cool.
I'm talking in the 2s. 100% financing, never have an appraisal issue.
Back to 06.
Back to different. That's different. This is a veteran, so we take care of these people.
Yep.
We care about them. I believe that they deserve it. They did stuff for this country that they deserve it. So I have absolutely no problem with that.
I've got a few people for you, and I'm happy that we got to do this. You're awesome, man. Thank you for dinner the other day.
You're welcome.
We're gonna
Thank
do
you.
Plenty of business. Thanks for coming on, bro.
It was a pleasure. Thank you very much.